Well, good morning, everyone. Good morning, everyone. Let me, there's a little bit of an echo here on my side of things. Can you all hear me okay, or are you all also listening to some sort of an echo? Just what? No echo? Okay, great. You all can hear me okay. Let's go ahead. I'll probably just remove my monitor then and just keep one of them here inside. So let's go ahead and get started, you all. Thank you all so very much for joining. Super appreciate it. Just a little bit under the weather here. Landed last night at 1 a.m. Flight was dramatically delayed, so we had to rebook it through Atlanta, and then that flight was delayed. So it was a very, very long weekend, and the entire plane was all snotting over each other and coughing and sneezing. So if I have to pause in the middle of going over the data and break out the snot rag, then please forgive me for doing that. We got a question, Mr. Ryan. How did the team do? Incredible, absolutely amazing. Won the entire thing. Unbelievable. I felt like I was watching a professional hockey game. Those girls are absolutely incredible. And the kiddo was the only 2011 playing in that team and one of the only ones playing in the entire tournament because she's moving an age group. So it was beyond incredible, beyond amazing. And because she was so much younger, they were very generous to her. She actually got the tournament MVP, which was they called her name and she didn't even go forward. She didn't even know that, and they were so encouraging, amazing family. So super, super nice people. But it was exhausting. 7 games plus a practice that ended at 10:30 at night. We didn't go to bed until midnight, 1 a.m. every single day, early games. I am Y'all know me, y'all. I've got a really, really big bandwidth, but it about broke me. My humanity is being exposed here, which is so unfortunate. But it was great. Great weekend. Absolutely fantastic. And spoke with a lot of real estate brokers out there, which was fun. Really interesting just getting a perspective of that market. A lot of the parents and that team are in real estate. One of them is a Compass broker. Another one owns his own business. Another one does property management, which was really fantastic. As a matter of fact, one of them does property management for one family that owns 8,000 doors in the Chicago area. One family, they own 8,000 doors, multifamily doors, only in the Chicago area. Unbelievable. So it was really interesting perspective to get from them. And also discussing the difference between our area. I mean, they're reaching record highs. Their market is reaching. They are experiencing the 2021-22 that we experienced. So they were shocked to hear how much our market has corrected, and looking at the graphs. It's always fun just to discuss the market with people that are in real estate. And one of the biggest challenges that they have, which was really eye-opening for me, is that if a tenant defaults on their lease, the eviction process takes between 6 and 9 months. And you have to, when they finally agree to move out, after 6 to 9 months of not receiving any rental income, you have to pay them $10,600 cash. Like it's a rule, it's a law, it's a city ordinance. So you have to pay them $10,600 cash. So they were just talking about horror stories of people breaking into like those brownstones, those 3-level brownstones where it's like a triplex, and they'll just have one family will break into it, and they'll just have the basement, first floor, second floor. And then you have to evict all 3, and you have to pay, in essence, $10,600 times 3. And then they'll just do it over and over and over again. It was like, y'all, that would not fly in Texas. I'm telling you right now, that would not fly in Texas. So it was interesting. Boy, talk about challenging market there, especially when dealing with tenants. Insane. Really interesting just to see how tenant friendly the laws are, but it's not even tenant friendly. At one point, it actually becomes crime friendly. You know, when someone can break into the property, generate an artificial lease, and then it takes 6 to 9 months, and then you have to pay them $10,600. That's not tenant rights. That's criminal rights as far as I'm concerned. So insane. So Maria's saying, sounds like Spain, but they never leave. You end up selling the house with occupants. Crazy. Yeah, they were saying that there are situations where it'll take well over 1 year. Well over 1 year. What's the rationale for the 10,000? That was my question, and they said that the city, the leaders of the city said, well, we do not want people to be in a position where they are homeless. So let's get the landlord to contribute towards that person being able to rent another place so that they are not homeless, or the word that they used was unsheltered. They do not use the word homeless. They use the word unsheltered. But the challenge is, you know, hey, good intentions. No one wants to see homeless people. But then you've got people that, just like the ESA, you know, good intentions. We all want people to have rights under ESA, and we want to support service animals. But what do we notice? We notice people just claiming that their dog, that's not an emotional assistance animal, classified as an emotional assistance animal with a letter from someone, and then they do that to avoid. So there's always going to be people that are going to take advantage of good intentions. But on their case, in my personal opinion, it's beyond that. It's downright, actually, you know, not tenant rights. It's criminal rights, in my opinion. And they're in the industry, and they're like, it's impossible. Like, it's impossible in this area. So really fascinating just to have that conversation with people that are in the business, are in the market, and the outcome is sky-high property values and sky-high rentals. That's the outcome, because people are taking their homes off the market on the rental market because they don't want to deal with tenants anymore, and then they're just remodeling and selling it for as much money as they possibly can. So it does the complete opposite. So this is specifically in Cook County, Chicago area, Cook County. So you go outside, very similar to the Austin area. You know, different counties will have different rules. Different municipalities will have different rules. So really interesting, absolutely fascinating to have that discussion with the professionals there. Well, let's go ahead and get started with updating the new listing to pending ratio, the single best leading market indicator available for the entire area. And by the way, you all, I show them all of the data that we track, and I show them all the, you know, the app. I mean, you know, one of the guys is like, I'm downloading this right now. Really amazing feedback that I received from people that have been in business for 20, 30 years. So I'm super excited. Let's go ahead and start updating this information. We're going to start with the weekly, and we're going to go with new listings. 1403, number of new listings in the past 7 days. Keep in mind that it is 10:13 in the morning, so we do have just a few hours left in the day. This information locks in at 11:59 p.m. tonight. Price increase, we're at 154. Price decrease. Before I even click on this, I am noticing more price decreases. So let's take a look at this number. Price decrease, we're at, interesting, 1717. There you go. There's that 92%. We have not seen 92%. Wow. Since October. This number shot up. We went down to 82% 3 weeks ago, really 4 weeks in real time. And now we're back up to the 92%. And what I'm noticing out there are just people seeing that the market is improving, but they're just getting a little bit too aggressive for the market. Yes, are buyers re-entering the market? No doubt. A lot of positive news. Y'all know how I started the year. I'm bullish for Austin real estate 2026. The macroeconomics look good. The microeconomics look good. We are 95% done with the correction. Sales price is a leading indicator. I do expect a little bit of a pullback, but the buyers are not being quote unquote suckered by the, oh my goodness, inventory is going to collapse. No, they realize that they still hold for the vast majority of the area. We're really at that balanced market. There are some areas that are super hot, 3.9, 2.8. But when you look at the entire market, it's a very balanced market, and buyers are holding firm on contract price or on offer price because they know that something else is going to come on the market. The buyers are very patient right now. Now, are there pockets where you have to put your 2021, 2022 hat on and say, we're going to have to go over list price, we're going to have to waive appraisal? No doubt, absolutely. I'm having those conversations with you all. As a matter of fact, I'm going to review a text message that I received from a very well-respected team price agent saying, showing leases in Lakeway tomorrow for clients coming into town just for this. They've been planning this since December. One property to show them. Everything else is getting snatched up. So really, and there you have it. Kind of feels like 2021 was what this agent said. We're going over list. Kind of feels like 2021. Absolutely, for certain market segments. That's why it's so critical for us to be hyper local when you look at the data. It's helpful to discuss the macro market, and we need to know the macro market. That's how we initiate that conversation. Hey, we just crossed 16,000 active listings. Hey, we're up X amount on active listings. But then what is happening in their neighborhood, their pocket, their subdivision? So 92%, interesting that we are now over the 90% back on the market. We're at 205 back on the market, 15% holding steady, active under contract. 571. Encouraging. I like this number, 571. Now, you all get to guess. You all get to give me 5 guesses. 5 guesses. How many pending? You all get to give me 5 guesses. How many pendings? So let's go ahead and just get 5 guesses going. I'll read out the 5 guesses. We've got Ryan starting us off at 399, a good number. We've got Precious at 375. Good stuff. Let's keep on going. Now, keep in mind, if you look at the bond market over the past 5 days, we had April 16th, which was the Thursday. It was a pretty bad day. Rates went up. And then you see what happened on Friday when the Strait of Hormuz was, pretty much Iran said, hey, we plan on reopening the Strait of Hormuz. The bond market just went down. You can see right there behind me, just absolutely plummeted. And that was really, really good for rates. Right now, we noticed that it wasn't a tanker. It was more of a, container ship was disabled because they decided to go against the blockade that was set up by the U.S., so they disabled that ship by shooting the engine room. And, of course, look at the bond market. That caused the bond market just to trend up a little bit. Futures market for oil was up 7%. So very, very volatile. And let me review rates here really quick before I read out the numbers. As of this morning, thankfully, it's unchanged. We're at exactly where we were on Friday, which is really favorable conditions. We're at 6.375 conventional 30-year and still under 6% on FHA 30-year at 5.875. Let me go ahead and read the numbers right here. We've got lots of numbers. We've got 399, 375, 260, 298, 233, 242, and a 305. And the number comes in, Sonia for the win. Comes in at 243. 243. That's going to put the ratio at a 0.51 starting off. Not bad. Not bad. Because take a look at the comparison between this week and last week. We were red, and that just flipped this past week. Now, when you go back to the beginning of the year, let's count the number. So all weeks, we're looking at 15 weeks. In 1, 2, 3, 4, 5. 5 out of the 15, we underperformed last year. That includes this week, which is an iffy, more than likely. And look at the week of March 16 through March 26, 0.81, 0.81, meaning if we just get like 1 or 2 more pendings, we're going to overperform the previous year. Now, that is 4 weeks out. I doubt that's going to happen. But overall, it's looking really good. Did you go back and update the last few weeks? Yes, I did go ahead and do that right before the call started. Went ahead and just got that over with. Good question. So this is the latest and greatest. And what we're noticing is an increase on the number of properties that are going pending 2 to 3 weeks after they actually go pending. So they go pending and then the agent waits. 90% of it is going to be new construction. Builders are leaving that product out there on the MLS as active, and then they're changing it to pending 2-3 weeks later. They want to use that listing to draw leads, that really attractive price, and then of course someone calls them and they say, oh, I'm so sorry, that one actually sold. Yeah, it sold like 3 weeks ago. But they're not saying that. They're saying, oh, I'm so sorry, that one sold. And then they're updating it to pending even like a week later. Because I'm having these conversations with you all. You're like, we're going to submit an offer on this property. It's no longer available. And then I track that property. And then 2 weeks later, it changes to pending. And the pending date is like a month earlier. It's not like pending a week earlier. It's pending a month earlier. So they're doing that on purpose. Nothing we can do about it. I've had a conversation with the MLS about that. And there's absolutely nothing we can do about it. Now, the reason why they're, quote unquote, allowed to do that, y'all know new construction. You submit an offer on a property and they say, okay, we've got a deal, but they hold on to the contract. It gets sent over to corporate, and then corporate signs everything in one batch. So, yes, you do have a deal. They're not going to all of a sudden say, well, contract's not executed, but you're going to get back the contract sometimes a week later, heck, sometimes 2 weeks later, actually signed by that head of corporate. You were under contract, but then you get it back, and then 2 weeks later the stack of contracts gets sent out to the admin, and then they go back and they say, okay, when did we actually reach an agreement? And then they backdate the pending. That's what happens. So it's something that we really need to be aware of, that pendings tend to go up. That's why we go back in time and update the pendings. Bottom line, we now have 3 weeks in a row, possibly 4, and then we add in these 5. We then would have 10 weeks in a row where the new listing to pending ratio outperformed the previous year, which contributes to me saying all of the data, 9 out of 10 data points, continues to point towards a recovering market. No longer a market that is eroding, where demand is eroding. Quite the opposite. Here we're approaching the 10 out of 10. The only item that is not recovering is going to be that year-over-year sales price, but we're okay with that. We're okay with that because that is that 90-day lagging indicator. Properties that are closing right now went under contract when? February, March time frame. You look at new construction that's closing right now, when do they go under contract? August, September, October, possibly even earlier. So that's why the price continues to go down, especially on new construction. Then you take our market that's very saturated with new construction, it makes it even more pronounced. Let's go ahead and update let's take a look at the week over week actually before we update the monthly. Week over week, whoa, we're already up on new listings. Interesting. Week over week, we're already up on new listings, 1.3%. We still have 11 hours and 46 minutes left for the day. And we are officially up already 1.3%. So that's going to break the trend over the past 3 weeks where we were down on new listings same week year over year. We're down on price increase. We've been up. We're down on price decrease. We're up on back on the market. And we are down 30% on pending. See, we're only down 2 weeks ago 0.5% on pending. We're going to be positive. We're not going to be positive from March 23rd all the way to April 6th. That's not going to be positive. We would have to add 97 properties under contract. That's not going to happen. This will happen. This will happen in the next 3 to 4 days. So as we update this information every morning, this is now going to go positive. A gap of 30% means that we are going to go positive this week as well. So we're going to have more pendings over the past 2 weeks compared to the same exact period last year. Are we going to beat the ratio? Not if we get another 75 to 100, more than likely 75, new listings that enter the market between now and 11:59 p.m. tonight. So I'm really excited to see this information first thing tomorrow morning. Let's update the monthly data. And first thing I'm going to do is go back to March to make sure that we're capturing all of the pendings. And we're at 2250. That's perfect. So we're good. Let's go ahead and start updating the month to date new listings from the first all the way to right now. We are at 3762, 3762. Price increase, we're at 557. Price decrease, we're at 4265, 88%. Reversing that 85% from last month, 88%. Back on the market, we are at 569. Oh, here's the other interesting thing is they were asking me about back on the market. They're like, hey, how many contracts fall through within your area? And I'm like, roughly between 18 and 20%. And if you go back a year, it's 19%. So I told them, between 18 and 20%. And they're like, oh, our area, it's brutal. Our area is like 50%. And I said, yeah, that's because you're in a super hot market. And they're like, well, what do you mean? I'm like, yeah, the hotter the market, the more properties are actually going to come back on the market. And I showed them the graph where we track this information of back on the market, and you can see the ratio. The hotter the ratio, the higher the ratio, the higher back on the market. And like in our area, when the market was like insanely hot, we were hitting back on the market ratios of 32%, 30%. Like, the fact that you guys are at 50% is unbelievable. I said we've never hit 50%. Even COVID, did we hit 50% in COVID? That was, we got close, 31%, 30%. That was close. I said the hotter the market, the higher the back on the market. And we have great discussion on why that is. I said that's why we track back on the market on a weekly basis and monthly basis. Because once we notice that number trending down, that means that sellers are willing to give out concessions. Buyers looked at 10, 15 properties and know exactly what they're buying. Buyer's remorse decreases dramatically. And that's why you see a decrease in the back on the market. It's counterintuitive, but you see a decrease in back on the market. Active under contract, we're at 1501. And pending so far this month, we're at 951. So 0.57 is the new listing to pending ratio for the entire month. Let's take a look at withdrawn. And we're at 401 withdrawn. And then we look at expired. We are at 187. That stays the same. 0.57 last April, we're at 0.65. As of now, the only thing that we need to be really on the lookout for is this new listing mark for this week. And is that going to carry over for next week? Are we now experiencing that delayed increase in the number of new listings? We were expecting that in March. Didn't happen. We're expecting that towards the beginning of April. Not only did it not happen, but we saw a double-digit percentage drop same week, year over year, on the number of new listings. So we are trailing the number of new listings compared to last year. And when you go to market update on teamprice.com, you can see that we are down 3.4% on the number of new listings entering the market year to date, same period. And I stopped yesterday because that captures the entire new listing mark, same exact period. On the pending side, we are already up 1%, which is super encouraging. This is going to be the cumulative pending. So the market is absolutely outperforming last year. So much so that when you look at the activity index, we have, out of the 75 zip codes that we track, we have 11 zip codes that have hit a 12-month high, which includes the same month last year. So April to April, 11 hit a 12-month high. How many hit a 12-month low? 0. Not one hit a 12-month low, which is really encouraging. It goes back. Let's take a look at the city. Do I have the city activity index city? Let me open that bad boy up. On the city side of things, 2 hit a 12-month high, 0 hit a low. So we don't have any lows on the activity index. The highs, we're looking at Elgin, that hit a 12-month high. And we have Smithville, that hit a 12-month high. Let's go back to the zip code. Really interesting. Let's see the 11 that hit a high. You've got 2-3. 2-3 is up 8.2% year over year. You've got, look at 2-6. 122% increase on the activity index year over year. That hit a 12-month high. 20% on 2-7. 2-9, 93.2%. 2.9 was 23.9% activity index. Now it's at 46.3. Everyone is flocking to the 2.9. Even 2.8 doing very well. February was the high of 51.7. Did dip down a little bit to 38.5 because we saw so many new listings enter the market over the past 72 hours. We did see some pretty high new listings hit the market. Let me take a look at the active residential listing here. And you can see that on Monday, so this is this morning, 161 new listings, daily change from Friday. Look at Friday, 294. Look at Thursday, 41. So we are noticing an increase on the number of new listings. Out of all the active listings on the market, 107 are short sale, 107 are real estate owned, and we are still seeing that 15 to 17 new properties being classified on a weekly basis under the category of real estate owned, either pre-foreclosure, in foreclosure, or bank owned. Every week, every Monday, I pull that number from tax record, and like clockwork, it's going to be that 15 to 17% entering the market. Let's take a look at the daily briefing. We can see that active listings were up 3%. Pending listings were up 4.1%. We can see that that's starting to go up quite a bit. 46.5% of all active listings have had at least one price drop. That number's gone up a little bit. It was 46, then 46.2, 46.3, now 46.5. That confirms the uptick on the number of price drops that we've seen this past week. We are up 3% on active listings. Cumulative active, we are down 12.3% on cumulative active listings or new listings, cumulative new listings from January to April. Pending listings, this is encouraging you all. We're up 4.1% on pending listings, and we are now very close to crossing 2024. More pending listings compared to 2024. So best pending listing count going back 2 years. We're super close to crossing that, which is really encouraging. And that's the daily snapshot of pending. When you look at the total number of pending that have occurred, let me go to residential inventory and show you. We had an excellent March. 5,144. That's the number right now. This number is going up a little bit because of all the brokers and agents that delay classifying the property as pending. But you can see that's the first time we've crossed the 5,000 pending mark going all the way back to 2023. So the momentum that we're seeing in the Austin market is real, and we cannot ignore that, which is really exciting. Cumulative pending. Now, we are comparing April all the way to the 20th compared to April of last year, the entire month of April. That's why it's down 7.8%. As we update this information, this will go up. So we are going to outperform the cumulative pending last year. Activity index, another encouraging. We are up on the activity index compared to last year, slightly, only by 0.8%. Some areas are doing very well. Round Rock now takes the lead. Buda was ahead of the pack last week. Round Rock now is taking the lead at 31.97%, followed by Cedar Park and then Buda. As far as zip code is concerned, 49. 49 is just, that's going to be your recession-proof zip code. You just can't go wrong with 49. If your client wants a deal in 49, you have to get a property that's overpriced, not remodeled, and then just, give the listing agents a reality check. There you go. You see, I've got to blow my nose. Got to get the snot rag and just put that to good use. Otherwise, you're not going to get a deal in 49. If the property looks good, smells good, feels good, it's priced adequate at market value, could even be priced, 3% over market value, it's going to garner multiple offers, and you're just going to have to tell your client, this is the hottest zip code in the area. That's why we create these resources and charts so that you can sit down with your client and they're like, wow, but I read an article saying how Austin is like the worst market in the nation. It's like, well, yeah, Austin is. And if you're interested in a West Campus condo, I can get you a darn good deal on 05. I can get you a good condo downtown. I can get you a great property in 41. But you're looking at the hottest zip code in the Austin area, and you're just not going to get a deal. You're going to pay market value plus, or you're going to go over market value, and you're going to reset the market, pushing that price up. That's what's happening in 4.9. We have to be aware of that for our clients. Let's look at the months of inventory. We are up 1.5% year over year on months of inventory. We are really close to now officially having less inventory this year compared to last year. When you look at specific cities, Austin has 9.3% less inventory this month, April 2025 compared to April 2026. And when you look at the 2-year inventory, we are still up 43.3. Only one city is down on inventory when you do the snapshot today compared to the same month 2 years ago. That's going to be Del Valle. And that shows you how builders have put a pause on new construction. They slowed down the rate of permits, and they just liquidated inventory. Now we're at 3.99 months of inventory as opposed to 6.64. What does that tell me? That the negotiating power for new construction in Bastrop is diminishing. Let's take a look at the comparison, new construction in, not Bastrop, Del Valle. And look at this. Now, if your client wants a deal in Del Valle, they've got to go resale. Because new construction, Del Valle, the activity index is 32.7%, only 3.08 months of inventory. On the resale side of things, the activity index is just a pathetic 17.8%, 5.18 months of inventory. Months of inventory, resale versus new construction, you've got 66.8% more inventory on resale than you do new construction. So that's where the leverage is. Builders have done a really good job pulling back on that inventory. Only 37 new construction active properties on the market and 60 resale. That makes it very challenging for that seller that's competing with that new build. But also, the builders are holding on to pricing way more now than they did 2 years ago. That's something to be on the lookout for. We are expecting just shy of 3,000 properties property closings this month. We are up 1.6% year over year on closings. And one of my favorite charts, number of closings, cumulative closings, January, February, March, April, per 1,000 agents, we're at 530. That's going to be our projection for. It's going to go up or down a little bit, maybe 532, maybe 528, but right on that range, 530. That's an increase of 8%. And I'm telling you right now, our numbers are exceeding that, which I'm really excited. You all have done a great job. I mean, super proud of the team. But really encouraged with the level of production that I'm seeing, not only at the macro level, but as far as the team is concerned, really, really fantastic job. Here's that lagging indicator. Here's the pricing side of things. And this is where the pricing is that lagging indicator. The headlines are going to emphasize this. Remember when the leading indicators started slowing down and we started pumping out articles saying, hey, Austin market hit a wall. The leading indicators have absolutely crashed. And yet prices were not showing that. And people are like, oh, you're just doom and gloom. Prices are just up. And we're like, doesn't matter. Pricing is a lagging indicator. Now, the exact opposite is happening. The headlines are all about pricing. Austin taking a beating. Austin pricing down another 1.6% average year over year. And then we're screaming, yeah, I get that, but that has increased affordability. Buyers have re-engaged with the market, and the leading indicators are up. The activity index, pending divided by active plus pending, we're hitting 11 out of 75 zip codes are hitting 12-month highs. But the headlines are going to be pricing is down, something that we need to be aware of. And you can see that we are still down 15.94% on the average sold price from the peak, 19.09% median sold price. If today is the absolute bottom of the market would have to appreciate 23.6% to make up that 19.1% drop to cross back into the 550,000 median price plus, and that would take roughly 57 months. When you look at all 7,957 properties that have sold so far this year, the median price is down 2.9%, accelerating a little bit over the past 2 years. The average price is down 2.9%. We actually had positive average last year, mainly because last year was a very bifurcated market where we're not experiencing that bifurcated market this year, which puts more pressure on pricing. Quite the opposite. The top 25th percentile now is underperforming the bottom 25th percentile, down 5.4%. This puts more pressure on pricing. On the price per foot, down 3.6%. We're not underperforming the bottom 25th percentile in price per foot, but we are underperforming on the raw price. And some people say, well, is that the median or average? Neither. It's the percentile. Okay, so the median is the 50th percentile. What we do is we break that off into quarters, and we say, what is the bottom 25th percentile out of everything that's sold? At what price does that bottom 25th percentile, where does that stop? For example, last year, over a 30-day period, 2,863 properties sold. The bottom 25th percentile stops at $330,000, meaning 25% of homes sold under that. This year, it's $319,900. So that same block of sold homes this year is $2,741. Over a 30-day period, 2,741 homes sold. The bottom 25th percentile, 25% or less, sold for $319,900 and less. And then we do the same thing with the top 25th percentile. So last year, out of the 2,863 that sold, 25% sold for $650 and more. This year, $615 or more. 25% of the 2,741 sold for $615 or more. We created this to answer the question last year of like, if all the leading indicators are going south, how come prices are still going up? And that's why we use data. We've got a saying, don't ever give your opinion when data proves a fact. And the data proved it's because we have a bifurcated market where the top 25th percentile was propping up the entire market, especially on the average side of things. Not the case this year. Not the case right now, this month. So far, we've got 8 cities that are up in the median sold price compared to last year. Bastrop, Burnett, Dale, Lago Vista, Liberty Hill, Manor, Smithville, and Wimberley. All the outskirts. The further outskirts are actually up year over year, whereas the core is down. City of Austin, so far, all the properties that have sold so far this year, the median price out of all of those properties down 4.4% in the city of Austin. The worst performing city so far, we've got Elgin at 8.7, we've got Lockhart at 10%, Marble Falls, brutal, 17.8% down. San Marcos down 9.7%. This is where we take all of these sellers' listings, and then we take the days on the market, the activity index, the absorption ratio, and we use a proprietary formula to guesstimate how many buyers are there. That's what we do. How many buyers are there, and then how many sellers are there per buyers? And then what type of market is it? Is it a hot market? And we create what's called a composite score. We take the absorption rate, the activity index, days on the market, sellers per buyers, and then we create a composite score. And if that score comes in between 60 and 79, or if it's over 80, it's going to be hot, 60 and 79 warm, 40 and 59 balanced, 20 and 39 cool, and then below 20, we've got cold. And you can see we've got 0 market cities that would be considered hot. And we've got 1 warm, 19 balanced. That's why I say this is a balanced market. And then we've got 0 that are cold. When you look at the zip code, then we've got 3 zip codes that are hot. 3 that are super, super hot. And we've got 4 that are warm, 44 balanced, 23 cool, and then 1 cold. What's the cold one? 05. There are 12.7 sellers per available buyer in the 78705. That's just brutal. As a matter of fact, don't take a listing there. It's just not worth it. Like, you just don't even take a listing there unless they're willing to price it 20% below the lowest one. It's the only way that it's going to sell. The absorption rate is coming in for the month of March at 21.5, 21.47 to be exact, outperforming last March, super encouraging. We did not outperform on the absorption rate. That's going to be sold divided by active for the month of February. That came in at 17.6. We did not outperform January. I do expect that we will outperform April. I will not update April's absorption rate until we're about 5 days away before April ends. We'll have enough data to then get the final reading for April. And then the market flow score, the 0 to 10, how is the market? 0, garbage, worst market in the world. 10, unbelievable, best market in the world. We're right there on the median, 4.96. We could even round that up close to 5. Right there on the median. For the month of April, that will be updated about 5 days before the month ends. But for the month of March, outperforming last March. Super encouraging. Really enjoy that. I'm glad that we're outperforming for the month of March. And you all, that right there is your update for the month of, or for the week of April 20th. I do want to remind you that we've done a dramatic update to Austin metrics. If you have not updated on iOS, we're 4 days away from getting approved on Android. We only have 4 days left at the closed testing, and then Android will approve it. But we've done a amazing update on the iOS. So I really upped the version quite a bit. Really cool, really excited. We've got heat maps. What I did is on the city side of things, when you hit view city detail, I used to just to open up the PDF, the PDF that we put together, and let me show you which PDF we're talking about. This one right here, the data and analysis. Before, when you clicked on Austin, it just opened up that PDF. right now it opens up a new screen that gives you the median price, the number of active, the number of pending, months of inventory. Is it a balanced market, a market summary? It gives you a chart that you can go back now 20 years, 1 year, 2 years, 5 years. It gives you an appreciation summary. And then you can click on Austin Full Report, and then it gives you the report. You can download, share it, browser. So update your app. The other thing, give us a 5-star review. Super excited with this app. Give us a 5-star review. And already have a lot of agents that have like, man, I was at a listing appointment, or I was at, talking with buyers and they're asking me questions about the zip code. I just pull up the app and I just have all that information there. So super, super exciting. Does it have all the leasing info too? No, leasing is not going to go until version 2. I mean, I don't forecast having version 2 until probably June timeframe. So I have to build all the different modules on the leasing side for version 2. So I just wanted to focus on the sales side right now. But on the leasing side, it's going to take me. Could I do it over the weekend with no sleep? Probably, but this is like, good enough right now. Really focusing on the sales side of things, and then we're going to make version 2 more of a, investor, cap rates, gross rent yields, connecting it to what Lucas has going on, getting a property rent analysis directly to that. So super, super excited about that. The other thing that I have officially begun testing out is the ability of people to request a analysis for their specific home. So I built that out. Now I just get like a raw version. No one's clicked on that yet, right? So we're launching features and then just seeing how that goes. And then from there, I'll create a module that'll connect the agents to it, to where agents will be highlighted within specific areas. Someone searching the 32 zip code, then they'll say, hey, here are 3 agents that you can contact immediately. So I've got a lot of amazing ideas for version 2, 3, 4, 5, 6. But people are blown away. The feedback that I'm getting on this app is just insane. So go ahead and give us a 5-star review. The more 5-star reviews we have, the better. And update your iOS. And once again, Google's going to be live here hopefully in the next 4 days. It's actually been 1,000 times easier dealing with Apple as opposed to Google. So Apple's been great. It's been fantastic. Where do I go to give a review? So when you go to the App Store and you go to Austin Metrics on the App Store, you scroll down and you can just hit the 5 and write a little feedback, write like a little comment or something like that. So right here, Austin owner, very helpful when looking at the overall market, along with zip code and city prices. Always good having an up-to-date insight on what's happening. So we're getting more and more people. Here's version 1.2.4 and all of the updates that we made to that version. So really excited. I mean, I even show this to title companies and they're like, oh my gosh, like this is insane. So super excited. At the end of the day, this is a tool for us, tool for clients, and it's fantastic. Super, super excited. Any questions, you all? Any questions? It is 10:53. Thank you all so much for being so generous with my voice, kind of being a little bit deeper than usual. I don't know, is this a better voice? I can just keep my voice this way. Is this better for you all? A little bit, thicker. Yes, Daniel, how are you?
I'm excellent. How are you?
Great.
How do I get to the second one, activity index, right here on the app?
Yeah, so what you want to do on the app to get to activity index, you can click on zip code. Let me go to the app right now. So when you click on zip code, there's a little button on the upper right that says map. So click on map, and it'll show you both the activity index and months of inventory.
Gotcha.
Cool.
Yep.
Thank you very much. Yeah.
Absolutely. Anytime. Great sports announcer voice. Love it. Love it. Well, you all, if there are no other questions, once again, give us that amazing 5-star review. And we've got, super excited where the team is, excited for what's going to happen in 2026, 27, 28. Y'all, I feel like we're just getting started. I mean, really excited for you all. Y'all are doing absolutely amazing. I just, man, could not hope for a better career, a better group of people that I get to do life with. Meeting Friday, yes, sir, absolutely. We do have a meeting on Friday, so super excited about that. We've got a meeting on Wednesday. We've got a meeting on Wednesday, and we've got a meeting on Friday. So we do have a team meeting on Friday. Super, super excited about that. So be sure to join us for our team meeting on Friday, and that'll be really exciting. Good stuff. Any more questions? Any more questions, comments, concerns, criticisms, complaints? Any more questions? Any more questions? Well, Sonia, I appreciate you. I appreciate you all. And if that's what, if no other questions, then that's all I have. And I've got, a smooth jazz radio station DJ. Thank you, Bertina. Well, we're going to end with more of an upbeat song of a movie that I love. It's actually one of my favorite movies. And you will probably see you'll probably know what movie. It really is one of my favorite movies. I've watched it like 5 times. You're going to laugh when you hear the song. But thank you all so much for joining us. Super appreciate it. See you Wednesday.